Zombie stocks should come with a health warning. They're basically the living dead in the stock world. What does that actually mean? Well, they're living hand to mouth. They are just about paying for, their debt, their interest every month, surviving, pushing on, really with no longer term future because of that debt implication. Now, there's many stocks out there struggling. Interest rates are on the rise, inflation, more and more stocks are moving into this zombie category, and it's important to know who they are, especially when you're looking to put any money into investing in the stock market at the moment. So I'm going to have a look through a basic scan, how you find these stocks, and point out just 9 that I think are worth a much closer look. So let's move into that scan. There's many different ways you can find these stocks, these zombie stocks, but the simplest and easiest way is just to take EBITDA, that's earnings before interest and tax, and divide that by the annual interest expense. That's going to give you the interest coverage, and what you're looking for is negative numbers, and the bigger the worse the actual stock is. And I've gone into bar chart, just ran a really simple filter, and we quickly see when I just put interest coverage less than 3, market cap anything over 5 billion. So here I'm going to pull back the bigger stocks out there that are struggling at the moment, and if we just scan through them, first up, Full Truck Alliance, huge interest coverage there, so one really struggling at the moment. Then we've got some big names that you may have heard of: Lucid, DraftKings, and we scroll further down, Rivian, another EV stock there, Palantir, Xpeng, another EV, Novavax, Biomedicals, Roblox, favourite gaming stock there, and more and more we go down, there's a lot of household names that we are very familiar with that are on this list: Snap, GameStop, DocuSign, Twitter, Splunk. There, some like real big companies that I say are very popular out there, and unsurprisingly, stocks like Carnival and Royal Caribbean, because of the COVID pandemic, really put them into a lot of trouble. So travel, tourism, biotech, EV stocks, they're the typical ones you're going to find on this list. So just by that simple filter, I've come up with 75 stocks. I'd suggest then go away and dive deeper into these, take a look at the industries they're in, dig into a bit more maybe of the fundamentals, check out the charts to see what they're doing. But I'm going to just pick on 9 now for you to take a closer look at. So before we get into 9, quickly explain the charts here. High Kanashi charts, and on the top we got a daily chart, and on the bottom the weekly chart for a longer term view. Now to kick off, we've got 2 EV auto producers. We got Lucid Group and we got Rivian, and as you can see by the stock price, both not doing particularly well. Then we move into leisure and tourism. We got Carnival, cruise lines there. Again, you can see that stock price taking a hammering, especially if you look at a weekly chart during the COVID crisis. Other ones you could think of there, Royal Caribbean maybe. There's quite a few in that tourism sector. I haven't even looked at the airlines, so you might want to consider them as well. American Airlines could be one typical example. Then we've got Roblox, the gaming stock, again not doing very well, followed by Snapchat. We've all heard of them, again not doing that great. A lot of competition in that sector as well, so could be over borrowed in and in serious trouble. And then Peloton, we all know Peloton, getting on our bikes, getting fit, but heavily in debt, servicing it all the time. And as you can see by the stock price in both charts, it's been a horrible 22, and really it's been a bad last couple of years for them. Then we have CrowdStrike, and these are ones that maybe are a bullish bet, risky but a bullish bet. They are IT, security, software, cloud type companies. You can see by the weekly price they've had a pullback, but they haven't been doing that badly over 2021. Is this a recovery? Is it a buy the dip situation for them? Let me know in those comments below what you think on those guys. And then we move to ChargePoint, back to the EV sector. Really, these provide the networks for recharging, that type of product, and again increased competition, costs. It's a struggling sector at the moment with a lot of competition, and they're not doing particularly well in there. And then we finish with Lyft, the on-demand sort of taxi hailing service, heavily in debt, and really you can see the stock price there really struggling. Zombie stocks are going to become more and more in play as the economic situation worsens, inflation increases, interest rates go up. Those companies are going to struggle. More and more are going to be on that zombie list. Now I've given you 9 to look at. Depends really on your risk tolerance, risk profile, how you want to play those. If you like a gamble or a risk, then these stocks could be for you because they could possibly provide a decent return. But like I say, very risky, and definitely worth keeping on your radar to see what they're up to at any given time. Let me know in those comments below what you think of the list, and have I missed any? What would you include on that setup? So if you've liked today's video, leave us a like. Don't forget to hit the subs and bell buttons, and all that's left for me to say is thanks for watching, good luck with the trading, and I'll see you in the next video.